Hey everyone, it's Tuesday afternoon, 2:15. Going to update the charts today. We were going to yesterday, but we decided we'd give it one more day. Wait to see. We showed this being the high on Friday, and this chart shows how we did 5 waves up for A, and then we did a triangle for B, and then a little impulse 5 waves up for C. That completed an ABC for wave Y. Now we're labeling this WXY because we have an ABC here for W, ABC for X, then an A, a B, and a C for Y to complete wave 2. This triangle completed a running triangle, A down, B up to a new high, C, D, and E. The new high here makes it a running triangle instead of just a contracting triangle. And 5-wave impulse out of the triangle. Didn't quite make it, liked about 7 points, making it to the target where Y equals W, and didn't make it to the 61.8%. So we have what appears to be now 3 waves down from this high, and we came back, started down to the E wave. That's your target after a triangle, a 5th wave out of a triangle to a new high. You come back to the E wave. We did that, got down below it this morning, but then ultimately the low of the 4th wave is at the bottom of the A here, and so far that's the low today has come right down close to that area, which is normal. That's what usually happens. You come to the E, then you come to the A, you support for a while, but what we need to see here now is 5 waves down on the short-term time frame, 15-minute chart, 30-minute chart. We need to see this appears to be just 3 waves. The 3rd wave gap this morning happened right in the middle of the 3rd wave, as we've explained before, 3 of 3. This needs to be a 4th wave. We just need to see lower lows here to give us a 5-wave pattern, and that would be the reversal. That'd be a strong indicator to show us that this correction is over with. So we'll wait and see tonight, tomorrow, see if we can get a new low down. And if not, if the market rallies back up and takes out this low right here, then we'll have to expect the market's going up to a higher high, and then we'll have to deal with what that pattern turns out to be when it happens, if it happens. I'm going to show right here. We posted this on the blog Friday afternoon around 2:30, right before the close. And what we were showing were how all the different ways to count all this sideways action that's taken place. And we left it on Friday afternoon where we were showing a diagonal 5th wave. 5 waves up for a 5th wave to make wave C. So that would have been 1, 2, 3, 4, and a diagonal 5th. So right here, in a diagonal, the 3rd wave can't be the longest wave, but it can't be the shortest wave either. So the 1st wave was the longest. That means the 3rd wave was shorter than the 1st wave. That means that the 5th wave had to be shorter than the 3rd wave, and it is. So there's nothing violated in this pattern here that keeps it from being counted the way that it's counted now. So an alternate would have been for A, and the way you look at this alternate, all you do is look down here at the alternate and then go up. These labels are just labeled where they should be up here on the chart. Just follow them up. So this was just a simple ABC. We finished 5 waves here, did an A down, a B up, and a C down, and then a 5-wave impulse for wave 5. That's what this alternate is showing. Second alternate is a running diagonal correction. You don't see these very often, but they do happen, and that's where the third wave would have finished right here. A down, B up, C down, E up, or E, D up, and E down. That would have finished the fourth wave correction. And running each leg, or the B and the D waves, make higher highs, and that's why that's called a running. They happen in fourth waves, and they can happen in a two-wave correction too, but not that often. And then a five-wave impulse to finish wave 5. So this alternate also works. And then the last one, which is the one that we really like the best now, is the running triangle. So like on the other chart, it's just where A ends here. You do A down, B up, C down, E, D up, and E for the fourth wave, and then the five-wave impulse out of it. So this is the chart that we showed Friday afternoon for everybody to be able to look at and just entertain themselves with all the different ways that this could have been counted. And not one of these have been violated. Every one of them works. So you can just take your pick, which one you like the best. It makes your chart look the best. And you can slap these labels on there because every one of them works. Nothing was violated. So we showed this as being the high Friday afternoon. We come in yesterday morning. We got a little gap down, but then the market spent the whole day trying to go back up and test this. And then we finally broke down. And this looks like 3 waves down for wave 3. We need to be in a fourth wave correction. So far it's holding the little channel line right here for wave 4 and wave 5. And this would complete wave 1. So that's what we're looking at right now. Tomorrow we need to see a new low. Tonight, tomorrow, give us the first wave down. This 5 waves down on a short-term time frame would indicate that we've seen the top and the correction's over with. So we'll be back as soon as we have confirmation one way or the other of a fifth wave down to give us the first wave, and then we'll monitor for a 2-wave correction on a smaller time frame, just like we got through doing, and then a third down. Should take us all the way back down to the lows several weeks ago, and much lower after that. So we'll be back. Look at the blog. If we don't do a video tomorrow or the next day, we'll be posting charts on the blog like we did on Friday when we posted this. We'll be back. Happy trading.